In this video, I'll explain why this cycle will be longer than the previous cycles. A lot of people are expecting Bitcoin and other assets to follow the same boom and bust cycles we've seen in the past. But the truth is, the rules of the game have changed drastically, and if you understand why, you'll be ahead of the crowd. So I'll break it down step by step for you. But before that, let's see how we are doing today in the space. I know some projects are performing very well right now, and if you're on my Discord, we actually managed to make so far 4x in just 48 hours. We're already making good profits and multiplying our money with one project that I actually can see is trending on crypto bubbles today, and that is Aster. We bought Aster at 50 cents, now it's already sitting at nearly $2. We're close to reaching 4x right now. And if you're on Discord and you bought that, well done. We're already making some good money with this pick. And by the way, if you want to be able to make money and catch good projects early, feel free to join Discord. This is where you would see what I'm buying, what I'm selling, and you can follow the same steps and make money together with me. This was one project that we bought 48 hours ago, and we're already 4 times above our initial investment. Just sharing that since I see it having the biggest bubble over here. It's a next generation decentralized exchange offering both perpetual and spot trading. Seems like this season DEXs are decentralized finance, which is something I've been telling you for a very long time, that decentralized finance is one of the most bullish narratives for this bull run. And this was my reason for having airdrop finance, to having deep book protocol, which is closely linked to C, because I knew decentralized finance will be one of the best performing narratives in this bull run, so I positioned myself well within those projects. So you can see the contrast here. A lot of projects are correcting, and just those that are in the decentralized finance, newer projects are skyrocketing. And those who managed to catch those projects early, they are already making some good profits and gains. I'm planning to buy some more picks over the upcoming days, so keep your eyes on Discord, where you would see my buy and sell alerts rotating the capital. So going back to why this cycle is going to be longer than previous cycles, because I'll keep it simple. Liquidity is the fuel of the financial system. When there is a lot of liquidity, money flows easily. Stocks go up, crypto pumps, businesses can borrow cheaply. When liquidity dries up, the opposite happens. You've got markets crashing, credit tightens, and things feel a bit painful and not great to be around in this time when the markets start going down. And historically, liquidity used to follow the so-called business cycles. In those previous cycles, we would see liquidity expanding and then contracting sharply, and the cycle would reset pretty quickly. It was very simple and easy to follow, but things have changed now. After COVID, this was the moment where the game changed. Governments stepped in, and instead of letting the economy rise and fall naturally, they started managing it much more aggressively. For example, in 2020, central banks didn't just lower interest rates, they printed trillions of dollars through quantitative easing. At the same time, governments were sending out stimulus checks, small businesses loans, and all kinds of fiscal support. So we saw constant intervention, which means we no longer have a normal business cycle, which naturally moves up and down. Growth has kind of flatlined, but government spending and central bank policies are stretching out the cycle. It's like instead of letting the roller coaster go up and down, they're smoothing out the track so the ride lasts much longer. And even if you see something that I've been sharing here on this chart, it was so predictable that we know from 300 to 400 or 500 days after the halving event, we would see the top for Bitcoin occurring, and that's been the pattern repeatedly happening in the past 3 cycles. But right now, we're almost past those 500 days and we're still not there. You can see that at the same time, a lot of altcoins haven't surpassed their previous all-time high, or they've not reached to the level where you can be taking profits, let's say. And there are a couple of reasons for that, which I've covered in previous videos. It's because there are too many projects out there, not enough liquidity, not enough fresh money coming into the space. Whatever money is in the space, it's diluted across way too many projects. And that's something we see in life in general. When something is in abundance with small capital, it just can't work, and we can't go back to the prices where we were in previous cycles. So here is where things get interesting. In the past, central banks injected liquidity by buying long-term bonds. That was called quantitative easing, or you would see it QE abbreviation. Now it's shifted to what some call Treasury quantitative easing. The US Treasury issues short-term bills instead of long-term bonds, and this keeps liquidity flowing in a more steady way. Think of it like this. Old quantitative easing was like filling up your car once with a big tank of gas, and you drive until it runs out. But now, the Treasury quantitative easing is more like having a constant fuel line connected to your car. The ride is smoother and you don't get the same sharp stops and starts as with the old quantitative easing. That keeps the whole market very flat, not like previously, sharp stops and starts, which is our tops and our basically the bull market and the bear market. Now it's kind of flat, more of a flattened structure. And then there is another issue here, which is a bigger issue, and that's the debt problem. During COVID, governments and companies borrowed a lot of money at super low interest rates, but a lot of that debt is now coming due. And instead of paying it off, they're rolling it over, refinancing it at today's rates. But if you think about it, this means that we need more liquidity just to keep that financial system running. Imagine like buying a car with a credit card instead of a 5-year loan. Every month you're paying and refinancing again. That keeps the need for liquidity ongoing, which stretches the cycle even further because, again, going back to square one, what I explained earlier, in previous cycles we had sharp liquidity rise and drop. Now this liquidity is ongoing all the time. Basically everything, as I outlined at the start, liquidity is the fuel for the markets. It drives everything. When you have sharp liquidity drops and sharp liquidity rises, this means we have the bear markets and the bull markets in crypto. So now when the liquidity is flat, this stretches the cycle and we won't see that sharp rise of price or decline of price. So putting that all together, governments are smoothing out the natural boom and bust cycles that we've been seeing in the past. Liquidity is being injected in a more consistent way throughout short-term treasury bills. And debt refinancing is keeping the liquidity taps open for years. This means every cycle is longer, slower, and more managed than the past. There is a positive side on that as well, because it means we might not see sharp crashes, a Bitcoin dropping 90%, other altcoins dropping 90%, and it won't happen as quickly as in the previous cycles. So the bull market could last much longer, which is what we're seeing right now. For this year, we've been going up slowly, steadily, but again, also we don't have a base for comparison because this cycle will be very different to the previous cycles. And what I can recommend to those who are just, let's say, starting with crypto, maybe position yourself in the projects that are well known, where institutional money is, because from what I can see, and somebody put it very well under my YouTube videos in the comment section, that this game right now has turned into a game of whales and institutional players. So I think at the end of the day, we're all here to make money, but we need to follow the bigger money. And just, you have to understand liquidity. Nowadays, liquidity in this space is more important than ever. It's not just about Bitcoin halvings, it's not about market charts, it's about how governments and central banks are literally managing the fuel of the system. If you understand that, and you understand the bigger picture, you would be able to make money with crypto. So that's for me today. Thanks so much for watching. I'll see you in the next video.